Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Monday, September the 29th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are beginning, as we often do, with the E-mini S&P Index Futures. Remember, index is singular, indices is plural. Latin word. All right, I'm done. So, what do we have? I am looking at the 1 hour chart simply because it's easier to see what's going on if we expand out. Now, you'll notice I've got 3 trend lines made from the 4 hour chart showing upside pressure. It tested this low one on Thursday and turned around and held a brand new area of inventory accumulation. And then we had the delta unwind straight down here. They held the floor and started moving back up. That's bullish, right? That's very bullish. Today, overnight inventory is also very long. So dips are buys until they do whatever it is they're going to do next. So let's take a look at key resistance pre-market. We have a resistance zone at value area high. That's 67.35. If we breach this zone, the next region of strong accumulation sits in this pocket all the way up here at 67.42 to 67.54. What we know about this is that the old call wall was sitting up there before it shifted much higher to 6,800. That's a big deal. Notice this put wall that was well below is now just a little bit above. I think the big put wall is very far below, right? It's still 6,300. Okay, so that's a big deal. All right, now let's take a look at what's happening with the 0 DTEs that are set up to trade today that have already been traded. That means they put them on Friday so that they could see what's going on. Well, they've been blown out, right? They expected a sideways event simply because these two ranges are only 50 points wide. And we've been doing a lot more than that in recent times. We really have been quite savage in the motion. Intraday volatility stepping up. Now, overnight inventory long over the call wall. So what do they have to do to make money when this position is essentially a bearish one? Well, they have to buy the instrument. Last night I said, hey, listen, I'm going to try and short here, see if it can come down into my 66.97-ish zone, and then I will get out of the trade, because if it gets up over 67.05, it's breached the line and it's going to cause more buying. So I think it stopped me out with about $11 or something like that, because I pulled it down. So that being said, this is what we're staring at: $6,705. That 67.05 area. It's going to be a likely floor of support. Pre-market high is 67.36, right? That's round and about what this anchored VWAP is. And it's anchored into the close of the trading day, right? So what this tells me is buy the dip, look at the momentum. For pre-market, that's huge. Look what it normally looks like. Here's what it normally looks like. So there is massive unwind here for negative delta and for traders buying the instrument up as they try to shift their net losses to somewhere neutral so that they can regroup and do whatever they want to do with their contracts. All right, so where's the dip? 67.21. That would be the first one. The second one, I think, would be all the way down here at the 67.05 breakout. Now, it could be that it sort of stalls around 67.16 to 67.30, 67.13, excuse me, correction, not 67.30. And so that's what I'm staring down. Notice, see how they're buying the dip here? We should have a rotation for the pre-market traders that are very heavy long. They should rotate and close some of their contracts. But with this kind of momentum, it's going to be very quick with a pretty good sized pop wherever it is that they decide they're going to unwind these instruments. So that's what we're staring down. Top end of the range, 67.36, 67.47, 67.54. Bottom, let's say that we are caught in the value area until the employment number on Friday. If that happens, we will unwind all of these longs. They'll begin to cover, and they'll move it right back down in a volatility move that will make people go, uh-oh, and then it'll screw us all up. My thought is it's got to break 6,700 for us to have shorting mechanics, and it's still got a lot of bullish flow. So if this fades, it's not going to be a nice smooth motion like this. It's going to be a big fat choppy mess. So you want to be very careful where you put your stops. Okay, let's look at a 30-minute real quick. Looks a little noisier, but momentum is still just completely savage. It is very, very savage. Dips are buy zones in this unwind, but they will, the folks who jumped in long, who did not have a short here, but are just trading the bullish motion, they usually try to unwind somewhere between 8:30 and 9:20. So watch for that. I still think dips are buys. This is very, very bullish. A lot of momentum that you don't normally see pre-market. Look at the momentum pre-market here. It's just not, that's not what we normally see. Savage, right? So for all the people who did not unwind on the close of Friday for their shorts, I'm thinking they certainly began to unwind as the market started rallying to the upside again. So dips are buys, could be deeper, but they are still buys. Let's go to the NQ. And of course, you don't have to trade the futures to stare down this work. What's amazing is that you can use the futures motion and it help you trade all your other instruments, right? We know from this event that there's a lot of pent-up pressure that's bullish, and so we have to watch out for that. Okay, so here's the NQ, broke that downward trend line, holding this zone below here. I like that, although, you know, let me remove this and draw a new one using the 1 hour, right? Floorboard, very nicely here. We'll leave that as green because they have not broken it. Okay, so that's what we're staring down. Again, caught between value area high, 24,900, and value area low, 24,560. Put support on the 0 DTEs all the way down here at 24,530. We could see a bounce zone there if that happens. But if we can't get back down under the 0 DTE call wall here at 24,750, we are going to head up to the bigger number at 25,000. There's a little bit of rotation occurring in these markets, but I can't get a feel for them just yet. I mean, in terms of the actual components of the NASDAQ 100 and the S&P 500. As soon as that really solidifies in my mind, I will talk about it. Take a look at this. Inventory accumulation, 1, 2, 3, 4, 5 hours, sitting in this zone. It matches this area. And this one had inventory accumulation for 1, 2, 3, 4, 5, 6, 7, 8 hours, right? And so as we sit here in our 5-hour formation, there's still a fair bit of motion that could help us decide direction here, right? Now, do I think we give back some of this? Yes. Do I think we test settlement and then run for the hills? I do. And so Ideally, I would be thinking about a long event at 24,750, but price action might be so bullish we never get there. So pay attention to this volume point of control right here at 24,800 and the big call wall above at 25,000. Dips are clearly buys, but they could be steep. Very strong positive momentum with a bullish trend tells us that if we fade, we're going to have a reflexive bounce that moves us to the upside. Otherwise, we just grind right up and recapture everything that we lost. So that's what we're staring down. Bullish pressure. Let's take a look at gold. Speaking of bullish pressure. Monster move here in gold. Now you might say, Anne-Marie, you didn't talk about the first 30 minutes. You didn't talk about the largest volume candlesticks. You can do that. What I am trying to give you is additional frameworks that are wide angle so that you can see what's going on, and then you can base your tight calculations. Okay, it's always good to survey the landscape before you jump into, I'm just going to take this crossover, or I'm just going to trade the breakout of X, Y, or Z. Okay, so the largest volume candle in recent view is the volume candle that occurs on September the 17th in gold. So what I did was I took the double test of that bottom, these two wicks, and I drew Fibonacci from low, 3,667, to the high wick, which turns out to be new support. That's what gives me validation for putting that wick there, that I can see it being tested and retested. And what it gives me is a 2.5x where the price action is stalling a little bit. Now, again, monster momentum in the pre-market, comparatively speaking. Now, this chart does normally have a fair bit of bullish pressure or bearish pressure in the pre-market, but this is above the average for sure. And it was above the average several days ago. Look what's happened. It had a mean reversion. Didn't come back as deeply as I thought it would. I thought it would actually sort of frame out in here another test of value area low around 3,750. It did not. It is now winding through another large formation after 6 hours of back and forth here. So $3,848, 38.48 is going to be the first place that the traders try to hold as frontline support. The next one will be right near that VWAP at 3,836. The volume point of control is way down here at 3,770. It's also got the VWAP sitting right on top of there and the put support. Notice traders on the 0DTE already outside of the range. So the buying here, I think it fades, right? But they are buying so that they can keep their delta neutral. And if the price keeps going up, they're going to be in good shape. All right. So value area high, 3820, 3,820. Value area low, 3,754. So what are we staring down? Call resistance way above 3,900. A lot of people calling for gold to be 5,000 by the middle of next year. I would not be surprised, right? Depends on liquidity, and physical gold and the futures instrument could easily disconnect because there are way more derivatives playing gold than there is gold available above the ground, not sunken in the sea, which I think, I don't know, the statistic is huge about how much of the world's gold is sitting on the seafloor because of, all of it being taken from native lands back to wherever country they're going. So anyways, that's what we're staring down. It's bullish. Pullbacks are buy zones. Be conservative in your space. And if we lose 38.48, it might not be a bad idea to wait for it to stabilize and recapture 38.48 before you move to the north. All right, let's take a look at SPY. Also, monumental pre-market action. This is really, it's very, very interesting, folks. My suspicion is that this is due to traders being on the back foot and shorting, much like I did, thinking that this area was going to break. I was so sure this area was going to break, I did not participate in this upside move, and it was very disturbing to me. I was very annoyed, and it was because my brain did not prepare for what if they come in and show you that this is going to hold. And they absolutely did. So here we are, pullbacks or buy zones here as well. We're in this trend line formation. So upward pressure puts us back to that 666 and then 667. Call resistance all the way up at 670. Dips are buys, okay? If it starts dipping hard, step out of the way and wait for the traders to come back into old areas of accumulation and set a floor again before they move higher. Could we? This number 660 is pretty important. It's sort of the floor for all the big option trades. Above it, they're bullish. Below it, they're bearish. And that's pretty much the line in the sand that they've drawn. The VWAP, 662. A pullback to that area would not be unreasonable. I do expect them to try and fill the gap, at which point they'll turn around and buy it back up again. That gap fill event is 662. Let's go ahead and confirm the gap fill events for the ES. The ES gap fill event is 6,697. May or may not get it. NQ gap fill is 24,726. If you've got Top Step X, the beautiful settlement line is there for you to work from. All right, everyone. I'll see you on the streams. Stay frosty.